Hi, I'm Wyatt.
And I'm Grace.
And you're listening to our dad and your host of the Vacation Rental Revolution podcast.
What's up, guys? Welcome to another episode of the Vodyssey Vacation Rental Revolution podcast. I'm your host, Shawn Moore, and I'm really excited to be with you today. Thanks for joining me. I know your time's valuable, and I always appreciate you spending it with me. Today, I want to talk to you about something that I think is a mistake that I've been reminded of recently, and something that we don't see all that often. We see it during different market shifts. And because markets shift, as economies shift, and they're very cyclical, it doesn't happen all the time, right? We usually see these 7-year, 10-year cycles. We've had quite a good run for a little while. We're starting to see a shifting economy happening around right now. And I want to talk to you about that long-term thinking and your long-term perspective, not just in vacation rental investing or whatever type of investing you do, but really everything, whether it's your relationships, whether it's your family, whether it's your fitness, whether it is your investing. You should be thinking long-term. I just recently saw a statistic that less than 53% of people ever think about long-term plans, and they defined long-term by a year or more out. And that's really crazy when you think about it, right? When we're talking about long-term, I'm talking about you should be thinking, what do you want in the next 5 years on a minimum, 10 years, 20 years down the line? Because time can either be an asset to you or it can be a liability. And we're going to talk a little bit about that. And one of the things as we go into shifting economies and market shifts, the things that we're kind of seeing right now, things are getting shaken up a little bit. You want to be aware of what's going on, but you also you should look and see what everybody's doing. What are the masses doing? A lot of the smartest people in the world always say they go against the grain. You know, that whenever the masses are doing something, they're usually doing the opposite. And so if everybody is starting to invest in something or run down a certain road, a lot of times the smart money, for example, on investing in investing terms, kind of holds back a little bit. They're very strategic about different things. When everybody starts to retract and hold back, the smart money starts to get into the game. The reason is because when people start to retract, you're going to start to see things go on sale, whether that's businesses, whether that's real estate, whether that's stocks, all different kinds of investments and assets will start to go on sale when things retract, because all of a sudden the buyer pool starts to shrink up because people start to sit on the sidelines. People start to panic. People start to want to sell. And the smart money goes in and buys those things, because smart money and anytime you're building something and you have that long-term perspective, usually smart things, if it's quality assets, they're going to go up over time. Look at the Dow Jones Industrial Average. It was, over all the time, it's always going up over time. Does it go down? Yes. In short-term periods, it does go down, but over time, it's always going up. How about real estate prices? We're always talking about real estate. Real estate is going to go up over time. Does it have pivots? Are there times where it gets turbulent and things drop a little bit? There's downward pressure on demand and prices drop and it becomes a buyer's market instead of a seller's market, all those different things? Absolutely. But over time, things are always going to go up. And so think about what your long-term perspective is. And I really challenge you to apply this to every area of your life. Just like if you're saying, hey, I really want to lose, 30 pounds in the next year or 100 pounds in the next year, whatever your situation is. If you take that long-term perspective and then you start to look at short-term, what are you doing to make sure that you're in line with your long-term plans? These hiccups in the market are a lot easier to deal with, a lot easier to stomach. You're not nearly as stressful. It just becomes a Tuesday afternoon because the future looks bright. The future looks amazing. We know that things are going up. Doesn't mean that in fact, in a lot of these times, you hear a lot of really, investors who have been around for a long time, a lot of your higher net worth individuals who invest in things, they get excited during these times because they know things are on sale. And what happens is they can go buy quality assets. They're not speculative. They go and find quality assets, quality areas, quality properties, quality stocks that they know that over time are going to go up. And so when everybody else starts to panic and everybody else starts to retract, interest rates go up, puts downward pressure on demand. Real estate prices haven't really fallen off the cliff. I don't expect them to fall off the cliff. Year over year, we're still up over 10% nationally. Appreciation, home prices are up a little over 10% annually, year over year. Month over month, It's about even. We're actually down 0.1%. So a tenth of a percentage point down. So it's almost a flat lined month over month. That interest rate hikes that have been going so aggressively right now have done their job. They're putting downward pressure on the real estate market, downward pressure on demand. And we're starting to see prices flatline a little bit, but that's month over month. It's not even, everybody's like, man, things are really slowing down. Well, they did slow down. They're not going up like they were. It's not a rocket ship of appreciation like it was the last few years, which it's not sustainable. It's a good thing, right? But because of that, there's some retraction in the market. And so if your long-term plan has to do with vacation rentals or apartments or multifamily or stocks or whatever your long-term plan has to do with, I'm not talking specifically about vacation rentals right now. I'm saying whatever your long-term plan is, make sure you're doing things today to continue to work towards your long-term plan. Like I say all the time, do something today to build that life you don't want to take a vacation from. Part of that is saying every single day I need to take action. Well, you should actually be thinking about your long-term plan, right? Think about what it is you're trying to build and stay focused on that. Don't get so scattered right now, or worse, what most people are going to do, and this is the biggest thing that I wanted to talk to you about today, is sit and wait. Then all of a sudden, time becomes a huge liability for you. Getting an asset or a portfolio working, maybe you already have vacation rentals, maybe you already have a portfolio. Now is the time to level up your portfolio, level up your marketing, level up the ways that your customer experience, whatever it is in our hospitality game, level up your assets. Maybe you've got an asset that it's time to start to upgrade. Maybe it's time to add to that portfolio because things are on sale. Maybe there are markets or properties that just weren't, it was tough to get to because there was so much competition in the last few years. Now there's not nearly as much competition. There's not that much inventory, so you still have to be diligent. You still need to buy quality because there's a lot of people that are offloading properties because they don't know how to manage them, they don't know how to market them, and they can be quality assets that were underperforming, and you can get those types of properties on sale depending on the market you're in. You're not going to get a huge discount in most cases, but take advantage of the market we're in right now, depending on your long-term plan. But I challenge you not to sit on the sideline. I hear so many people say all the time right now that I'm just going to wait and see what happens. I really challenge you not to be the wait and see what happens type of person. I challenge you to be proactive. Based on your long-term plans, take action toward what you were trying to build, toward what your property goals are, what your fitness goals are, what your relationship goals are. If you're wanting a family, what are you doing today that for that long-term plan of the family? What kind of legacy are you going to build for that family? What kind of example are you going to be? Things that you're doing today have consequences and matter down the line, but you have to think about down the line. Don't think about everything right in front of you right now. Remember when right when COVID hit, there was almost a 34% drop in the Dow Jones Industrial Average. Everybody panicked because it was short-term thinking. If you're investing in something like a stock market and you're investing typically for the long term, why in the heck are you panicking when a virus hits? Sure, it was something that was unprecedented. None of us ever heard about and knew about. We were all scared about it. Who knows what was going to happen? But why would you change your long-term plans and make adjustments with a very short-term mindset? I challenge you to say, okay, I'm going to think about what my long-term planning is and actually have a plan. If I said, hey, I'm going to give you $100,000 today, and you have to tell me in 5 minutes what your long-term plan is for your relationships, for your investing portfolio, for your health and fitness, all those different things. What is your plan? What do you want in the next 5, 10, 20 years? Are you even thinking about that? And could you spit it out within 5 minutes? Do you know about that? Could you recite that back to me? If I said, okay, you got 100 grand, go. If you can't do that, you should really question yourself and say, okay, well, if I don't have a plan, then I'm just reactionary. I'm not proactive. I'm reactionary. I'm playing defense all the time instead of offense. So right now, there's going to be assets on sale. Right now, there are going to be things that you can do to your current portfolio to get ahead of everybody else. You may not be making these huge strides right now. You may be being proactive enough so that you're setting yourself up to when we do get another really good run, all of a sudden you're that much further ahead of everybody. You added certain assets to your portfolio. You started doing something every single day. Your health and fitness, that doesn't have anything to do with the economy. But a lot of times when things are going bad and things are stressful, people take their foot off the gas. They stop going to the gym. They stop eating well. We're right in the middle of the holidays. I'm recording this the second week in December. And, a lot of people will say, well, I'm going to hit the gym in January. Go to the gym right now, see how empty it is compared to what it's going to be on January 2nd. Completely different ballgame in gyms. That's crazy to me, right? It's because people don't think long-term and they don't think, okay, I'm going to do something every single day to build toward my long-term plan. And in a shifting economy, I know we're at the end of the year and we're also in the middle of a shifting economy. A lot of people are just going to sit on the sidelines. If you're going to sit on the sideline, then accept when something doesn't happen your way, and you're going to be that person looking back and saying, "Man, imagine if I would have done that. I could have bought that property. I could have done this back then." You know how many people say that about, "Man, I should have bought a property 5 years ago. I should have bought a property when they were all being foreclosed in 2008, 9, and 10. Well, whenever you're in a seller's market, everybody's buying. When you start to become into a buyer's market, we're not in a buyer's market right now, but it's as close to a buyer's market as we've seen for a long time, and it might shift into a buyer's market. But guess what? What a buyer's market means is there's a lot of buyers that don't buy. There's a lot of people that sit on the sideline and they don't do anything. And so think about, I'm not telling you to just rush out and buy stuff because it's on sale. That's like because it's a Black Friday sale and TVs are half price or a third of the price, but every room in your house has a TV. You don't go buy a TV just because it's half price. You don't need a TV. That doesn't fit into your plan. I'm saying think about your plans right now. Think about what those plans are and take advantage of a market that we may not see for a while. And it might not, who knows how long it's going to last. The average recession in the US lasts 18 months. That's how long they last. They don't last forever. And so you've got 18 months to possibly find some things on sale. And then if you do have a portfolio and you are in stuff for the long term, don't panic. There are things right now that you should be doing to level up the game, whatever game it is you're playing. And so that's what I wanted to talk to you about today. Think about not sitting on the sideline, because I hear way too often, I'm going to wait and see what happens. Okay, that's okay. Let everybody else wait and see what happens. But I really challenge you. You are on podcast. You're listening to this. You're spending your time with me, and I'm sure with many other people, because you are not that person that wants to sit on the sideline. And so don't allow yourself to, depending on who your peer group is, who your influences are, who you're hanging around, because there's a lot of people that are just going to say, I'm going to wait and see. I'm going to wait and see what's going to happen. Well, winners don't wait and see. People who make moves, the most successful people in the world, they don't wait and see. So don't be the person that's going to wait and see. I know you're probably not. I'm probably preaching to the choir, but it's always a good reminder. I like having these reminders. I just heard this kind of a message recently and was like, hey, it's a good message. I need to be reminded that all the time. And I hope that that's what I'm doing for you. It's a good reminder. Don't sit and wait and see. Have a plan. Have something you're working toward. Understand what you want your life to look like in 5, 10, 20 years. Understand that when you're looking at it for the long term, the future looks bright because things go up. Things get better over time. Doesn't mean there's not challenges. Doesn't mean you're going to have bumps in the road along the way. But those bumps in the road are just that. They're bumps in a long road that's going up, and the future looks amazing. And right now is one of those times where we can accelerate that progress and that the things that we're trying to do, particularly in certain markets, whether you're in business, whether you're buying real estate, whether you're buying stocks. I mean, even, I'm definitely not your stock guy to give you stock advice, but I know there's a lot of things on sale, a lot of quality assets on sale right now. So consider your long-term plan, take action. Don't sit on the sideline, and don't be that wait and see type of a person. So guys, as always, thanks for joining me. Thanks for being the best part of this show. If you got any value out of this, if you liked it, give us a thumbs up. If you have 30 seconds, give us a review, share it with somebody else that you think would add value. We really do appreciate that stuff. It does help us. And as always, go pick one thing that you can do today to start building that life that you don't want to take a vacation from. Cheers, my friends.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website?
Yes! For more amazing content and expert advice, visit Vodyssey.com.
Thanks for listening, and we'll see you on the next episode.